Hi everyone, I'm Amy Lei, a stock trainer at Untitled Chapter company. Welcome to join this WhatsApp learning group, Untitled Stock Club. And this club has been founded just 2 days ago by Untitled Chapter company, and the purpose is to help you learn and improve so that in the end you can gain this capacity of analyzing and making trading decisions all by yourself. Okay, because Untitled Chapter company is a stock training school. We provide training courses as well as this Untitled software, the powerful analytical tool for our Untitled members, so that they can really make profit independently or by themselves. And for you guys, maybe currently you are not yet Untitled members, but still we hope that after you have learned for a while in our WhatsApp learning group, you can improve and learn something practical and helpful for your own tradings. Okay, so let's start today's contents. The topic is called Following Bankers to Make Profit. Okay, first of all, let's check the truth of stock market. This is a very harsh truth, harsh reality, but still we have to face it, which is 70% of participants in the stock market lose money, 20% can break even, only 10% can make profit. Okay, so we don't want to admit such a reality, but still we have to, right? Then further question is, why is it that it's so difficult to make money in the stock market, especially for general retail investors? For the ordinary retail investors, I believe majority of them are unable to make profit in the market in the end. I'm not talking about making profit once or twice. That's easily done. But I'm talking about make profit constantly in the market, earn far more than they lose. So that's the difficult part. And I believe most of retail investors cannot achieve that goal. But then we might want to further ask why. Why simply we cannot make profit? Majority of us simply cannot make profit. Okay, so because most of you belong to the retail investors. We are not really the institutions, the banks, the governments. So we are just a normal, ordinary, small retailer, right? So for most of the retailers cannot make money. Why? What's the reason, right? So firstly, we check. First reason that retailers are unable to make profit is because they trade frequently when the price is in uptrend. Means the market actually is bullish, but we buy and sell frequently, only make some small profit every time. Just a small profit every time in the bullish market. And then when it's already the top, we also have bought. We entered, but then the price dropped sharply. We are stuck. After we are stuck at the top, we cannot sell in time. Or in another way, we cannot do cut loss. We cannot cut loss. Okay, so that's the second reason. The third reason is after we are stuck and the market begin to turn bearish for medium term to long term, we keep holding those quite bearish shares. And when the price become low and lower, we keep holding, so we lose more and more. We stuck deeper and deeper. Okay, so these three reasons actually explains why we simply cannot make profit, right? Because bullish market, small profits, maybe break even, but once the bear market come, we lose great amounts. So in the end, we lose more than we earn, right? But then why the retailers simply cannot avoid such three mistakes? I believe a lot of people, a lot of retailers know this, know that it's not right to trade frequently in the bullish market, or know that they should cut loss when they are stuck at the top, and they have known that they shouldn't keep holding those bearish shares in the long-term bearish market. But simply, why we cannot avoid such mistakes? We cannot avoid such mistakes. Well, the reason lies in the reason provided, let's say, provided by the behavioral finance. Do you know behavioral finance? This is a subject recently, in recent years, quite popular. This subject studies how the investors' psychology can greatly influence their trading behaviors. And according to behavioral finance, investors are risk averse when they are at profit, and when they are at loss, they prefer to take more risks. This conclusion perfectly explains why we trade frequently when it's in the bullish market. Because when we make some small money in the bullish market, we are risk averse. We don't want to take even a bit risk, so we are eager to sell. So we buy and sell frequently. In the end, we make small money, right? And then when we are stuck at the top, why it's so difficult to cut loss? Because when we are at a loss, we don't want to face the reality, and we want to take more risks because we don't want to lose money. So we always hope that someday in future the price can in the end go up, and we can still make profit. We just don't want to face the reality that we lose money, right? So that's why we cannot cut loss when we are at loss. When we are stuck, because we prefer to take more risks when we are already at loss. And also in the same spirit, when it's already long-term bearish, although the price keep hitting new lows all the time, price go down lower and lower, we still don't want to sell because we already lose much. Then we think that what's more that we can lose? We already lose, since considering we already lose so much. So what more we can lose, right? So maybe nothing more to lose. So I just keep waiting, right? So that's why we keep holding those very bearish shares. So we hope that in sooner or later in the future, the price can finally go up, so we can unlock our stock capital. So we keep such hope in mind, and because we prefer to take more risks when we are already at loss. And then you may further ask why we are risk averse when we are at a profit, and when we are at loss, we prefer to take more risks. Reason is the weaknesses of human nature, including greed and fear. When we make profit, we are at a profit, we fear that we lose all the profit we have made. So also explains why we are risk aversive when we are at profit, right? And when we already lose money or we stuck, we don't want to lose money because we are greedy. We are greedy. We only want to make money, make more money in the market. We don't want to lose. That's why we cannot stop loss and we keep holding those bearish shares in the long-term bearish market. Okay. Then, after understanding the reason why retailers cannot make profit or they always lose money, lose more than they earn in the stock market, then here comes the question, how the retailers can change the destiny of losing money, right? We definitely want to change such destiny, right? Answer is, we can follow the minority who can make profit and follow them to buy and sell, right? Remember at the beginning we mentioned 10% of the participants in the stock market still can make profit, and actually they make the greatest amount of profit in the market. It's very lucrative amount. So then who are the minority that can make profit in the stock market? If we have found them, then we follow them. They buy, we buy, they sell, we sell. Then of course we can also make profit, right? So then who are the minority that can make profit in the stock market? Answer is the big boys. The big boys means the institutions, the government, the banks, the insurance companies, right? So they are always the final winner in the stock market. But why? Why they are always the final winner? Okay, so firstly, they are in hold of enormous amount of money. Okay, so as a retail investor, we think that 100, let's say 1 million or 10 million or 100 million is already a very big figure. It's a very big amount already. But for the big boys, the money they put in the market can be a billion. 1 billion, 10 billion, or even 100 billion. So that's really enormous amount of money. So compared with them, the money that the retailers put in the market is really a very small amount. Really a small amount. When the big boys can control very big amount of money, they can control the price movement. They want to push the price up, then they can continuously put money into the market. Because we know that for the stock market, if money flow in, the price would go up. If money flow in continuously, then the price would go up continuously, right? Considering the big boys, they have such great amount of money, they can do that. Push the price up continuously because they can put money into the market continuously for a long time. Okay, so this is the first reason why the big boys can make profit. And the second reason is, for the big boys, they usually have a very professional group with a lot of experts. So for them, in this group, some of them might in charge of the valuable information collecting, okay, and some of them may in charge of all the analysis. The analysis may be based on the TA, the charting, or based on the fundamental analysis, the company's financial statement, right? So some in charge of the analysis and also the decision makings. After they have they have done the analysis, they make a decision, and then some of them may in charge of the trading. Okay, so because all of them are experts in their own fields, in the end, they can always, and they are most sensitive and the fastest ones to smell and catch the big chances. Okay, so these two reasons have determined that the big boys can always make profit, and also these two reasons have determined that as a retail investor, only by following the bankers can we make profit. Okay, then here comes the question, how can we follow the bankers to make profit? Where to find how do we know that the bankers entered, and how do we know that the bankers take profit and left? Okay, so this powerful indicator in the Homely software I'm sharing with you can do that, can achieve the goal. This indicator called multicolor dragon, abbreviation MCD. Okay, this MCD indicator, we have three major components. One is the red bar. We can see the red bar, right? The red bars represent the big boys, and the green bars represent the retailers, and the yellow bars represent the hot money. Okay, so we of course belong to retailers, right? And if we see a lot of green, means a lot of numerous retailers have been stuck in the market. And if we see a lot of red bars and very long red bars, means that big boys in there. And if it's check the value here, we have 25, 50, 75 and 100%. And if the big boys can even reach 50% and stably around 50% or even higher above 50%, means the big boys already take control of the price movement. Usually that's the period when the price is in fast rise, is in the rally. Okay, price will soar up smoothly and at a very fast speed. Okay, so that's the components of multicolor dragon. And here also by what's the function of multicolor dragon? Function is by following the red bars, green bars, and yellow bars, we can know how the bankers they have operated in the whole process of accumulation at the bottom, and how they do the water testing, how they pull up for the first time and then pull up for the second time, and how they take profit. After they take profit, how the market crashed. By checking the performance of multicolor dragon, we can know that usually at a long-term bearish, at the bottom, after a long-term bearish market, the big boys would begin to collect the chips. After they have collected enough chips, they would do the water testing. They would do the water testing and flushing out. After the flushing out, they will try to pull the price up. Maybe for the first time, after a rally, some correction, maybe second rally, third rally, some other flush out, then some other rallies, right? And in the end, after the big boys have made enough profit, they would take profit, and then the price would drop sharply. there would be the crash, because the big boys, after the big boys leave, after they leave, the money inflow no longer is continuous inflow, continuous and stable inflow, because usually at the top area, only the retail investors would desperately enter into the stock market and buy the shares at a very high position, and those shares actually are sold away, are sold from the big boys. Means that at the bottom area, a lot of retail investors, they have to sell. They sell because they cannot bear the great losses. At the bottom, the retailers sell, and the big boys collect the chips and they buy the shares from the retailers. Okay, and then after the long-term rally, after big rally, then the big boys begin to sell. Sell to whom? To the retailers. Once the retailers have taken over or have bought the chips transferred by the big boys, because for retailers, they don't have enough money to push the price up continuously, then the price would crash, because no energy supply, no money inflow. Okay, so that's how the market moves, the regularity of the market movement, and also this is how the big boys, they can make profit for every trading. For big boys, every trading, it might take them a very long time, 1 year or even several years. But for retailers, usually, just mentioned, we make small profit in the bullish market, but then after we stuck at the top, we keep holding, so we lose, and at the bottom, we cannot bear any longer, we sell at a great loss. Okay, so that's how it works, the stock market works. Okay, then we already mentioned the multicolor dragon. Multicolor dragon can help us know clearly when how the big boys collect the chips at the bottom, and when the collection is completed, and when is the time when the collection is completed, and after the rally in the bullish market, how the big boys take profit when the big boys begin to leave, and when is the signal that they already left. Okay, so how the multicolor dragon help us achieve such goals? For example, show you. Okay, so this is let's say for DBS, right? So for DBS, we see, can you see, this is the high point. Previously the price in uptrend, right? Previously the price in uptrend, and we see the big boys 50%, even reached 75%, stay there for several days. After that, the big boys begin to decrease sharply, right? So here, I want to focus on this candle, this long green candle. Why? Because if you check the corresponding bar of multicolor dragon, you will see this bar is the longest. Okay, so when the red bar, which stands for the big boys, right? When the red bar already is the longest one, after that the red bar begin to decrease, means that's already the moment that the big boys decide to leave, because they have made enough money. They begin to take profit and leave. Yeah, that's the moment. And what we want to do is we draw a box to cover the high and the low of that key candle corresponding to the multicolor dragon bar with the longest, with the red bar the longest. Okay, so after that, we see although we have some ups and downs, right? So actually we see some short-term rallies, but you see interesting, every time the price touch the levels we have drawn based on the key candle, a drop. Why? Because after the big boys leave, the retailers, the rallies, which are the result of the retailers buying, cannot sustain, because the retailers don't have enough money to push the price up further. So every time the price touch the level of the key candle based on the longest red bar of multicolored dragon, then the price will drop. So you know that the big boys already left. You see, in a very long time, we don't see big boys, only yellow bars, right? Yellow bars means the hot money, the speculators who in and out very frequently. So that's why we see some small rallies, okay? But since this moment, we know the big boys already left, already begin to leave. So after, in these ups and downs, they have left completely. Okay, so then see, finally, when the price finally unable to break up the resistance level here, then the price begin to drop sharply. And when we see here, the moment the green bars appear, that's the beginning of a sharp drop. Okay, yeah. So that's it. How we can escape the top area based on multicolored dragon, the red bar. Okay, because we want to escape the top, right? This is the top. And then how we can catch the very big bottom? This is how we can catch the big top, because this is when the big boys take profit. Yeah, this is already the top. Okay, and by drawing this box of the key candle based on the longest red bar of multicolored dragon, we can know the exact level or exact location, position where the big boys take profit. Okay, and then how about at the bottom, how the big boys collect the chips, and when is the collection completed, and when will the big rally, big pull up come? Okay, so here we need to focus on the longest green bar, because we know the green bar stand for the retailers. When the retailers is the most, okay, the red bar, the green bar is the longest, which is this bar. So correspond to this long red candle, right? Long bearish candle. So we find the longest green bar of multicolored dragon and find the corresponding candlestick, and we draw a box to cover the high and low of that key candle. So this area should be the area when the big boys begin to collect the chips. Okay, of course, this collection is a process. It requires some time, right? We see some ups and downs around this level. That's the collection, the collection, and also some flushing out at the bottom area. So when you see, this is the, let's say we call it the banker's cost area, right? We can call it the banker's cost area. You see, the first time the price stand above the banker's cost area, then faced with resistance at the previous high, so drop below the banker's cost area. So the big boys begin to collect more chips. So in the ups and downs, the retailers would keep selling at a low price because considering the price already risen a bit, they lose less than they are satisfied enough. So they choose to leave and end their agony. Okay, and so we see the price finally stand above the top of the banker's cost area at this moment, but still above the resistance at the previous high is strong. We see the price try to break up for twice, and also around this area, what we can see is the retailers already almost disappeared. And then here, focus on here. This is the moment when the price finally stand above the resistance level and retailers gone completely. And at this moment, the big boys already quite stable around, let's say this is 40, almost reached 50. At this level, I believe the big boys already reached 50%, and before that, we see the big boys can be at least stable above 25%. Okay, so this is the moment when the big boys have completed the chip collection at the bottom, and the flushing out have already also has been completed. Means this is the beginning of the big rally. So this is how the big boys collect the chips at the bottom and also do the water testing, do the flushing out. After all these things are done, the price begin to give us the big rally at this moment. Okay. And you see, we can check some other innovative shares. For this one, Riverstone, we know it's very strong for a while. It has been very strong for a while. And we see that this candle corresponding to this long green bar. This is the longest green bar, right? So we draw a box cover, the high and the low of this key candle. So this is the banker's cost area. And once the price above the top of the banker's cost area, that's the beginning of a rally. It means that the collection of chips almost completed, and after that we see some rally and some sideway. That's the water testing, and this is the flushing out. And pay attention to this candle when the retailers finally disappear completely and the big boys increase sharply. This is the moment when the rally begin. Okay, so this candle marks the beginning of the big rally after the chip collection at the bottom, the water testing, and the flushing out. Okay, so this is for Riverstone. And the conclusion is only by following the big boys we as retailers can make profit. Because if you want to buy very safely, you buy here, right? After you buy, you keep holding Riverstone all the time. As long as the big boys remain quite stably above 50%, you see, for all the time, remain quite stably above 50%, means you can hold. And also don't forget, we can check the longest red bar, right? The longest red bar to check whether it is the moment when the big boys begin to take profit and leave. And we see this is the longest. After that, the price keep going up, never drop below this key candle, the bottom of this key candle. Means this is not really the moment when the big boys begin to leave. Okay, this is not. Okay. And then, you see, this is another example. At the top area, we see the big boys increasing, and this is the longest red bar of big boys, and the corresponding candle is this one, the key candle. And after that, although the price continue going up a bit, and then still in the end the price dropped below the low price of this key candle. So we see the price sideways there for several days, then finally in the end begin to drop. After that, you see this time we have another small rebound, almost touch this key area where the bankers take profit. But still, after that, if we see the price drop again, means the big drop is coming. Big drop is coming. Okay, so this is how we can follow the big boys to sell. Previously, Riverstone showed us how we can follow the big boys to enter and keep holding all the time. And when the big boys begin to take profit, we follow it. At this candle, sell. At this candle, sell. We have a lot of opportunities to sell. The market actually have provided us a lot of opportunity to escape. Also, this small rebound, if you have noticed, realize this is the moment. This is the position, the level when the bankers take profit. When you see this rebound, about to touch the level, then you surely know the price will drop again, and you would leave immediately. This is the last chance for you to escape the further big drops. And after that, we see the retailers keep increasing all the time, and the retailers predominate. In the end, we don't even have any sign of red bar, any sign of big boys. If it's some very small red bars, can be neglected. Okay, when the retailers predominate, no chance. Okay, and show you another example. This is the, let's say this is the bankers cost area based on the longest green bar of multicolor dragon, right? This candle and the bankers cost area. After that, the price gave us some ups and downs. This is the water testing, flushing out, and in the end, this candle is when the retailers finally disappear completely, and the big boys already more than 50%, almost touch 75%. So this is the moment when the big rally would come. And by following bankers to enter at this moment, our profits in 41 trading days until now, right? This is April 20th until now, is our profit is 108%. So our capital doubled by following the bankers to buy. Okay, so this is the way that we can make biggest profit with least effort. Okay, so follow the bankers, buy when the bankers begin to push the price up. Okay, and then we keep holding as long as the bankers remain in the stock, remain there, we can keep holding. Check the longest red bar here. The corresponding candle is this one. We see some ups and downs after that, but the price remain above the low price of this key candle. Means what? This is not really the moment when the big boys begin to take profit. So you still can keep holding, okay, until now. And also we can check this one. This one is quite crazy for this rally, right? But we check the bottom area first. Okay, so this is the longest green bar here. The longest green bar of multicolor dragon. The bankers cost area is here. After that, the price gave us a rally, small rally. This is the, let's say, the water testing, some flushing out in the form of a narrow range of consolidation, flushing out, and initial pull up. Let's say this is the initial pull up. After that, some other flushing out, and this is the moment when the big boys begin to greatly push the price up. So this is the moment when the price begin to soar up. So you can buy here when the retailers completely disappear, right? Retailers completely disappear, the big boys increase greatly to exceed 75%. So this is the beginning of a very big rally. This one is so crazy because we see the big boys even can reach more than 90%, almost 100%, right? So that's why we can see the range within this period, only 51 trading days from March 25th until June 11th. And only in 51 trading days, our profit is 5 times, more than 5 times. Your capital increased by more than 5 times. So that's very, very crazy. Means the more the big boys, the longer the red bars, the more crazy the rally. Okay, so you see, by following the big boys to buy and sell, making profit is so easily, and how greatly the profit we can gain by this way, right? By following them. It's crazy. 500%, more than 500%. Okay, so you see, for this a wolf, we can say this is the big boys, the strong, the quite fierce. But then for us as retailers, we are like the sheeps. We are quite vulnerable. Okay, so we are quite vulnerable. So if as the sheep, it's impossible for us to win over the wolf. So in front of the wolves, we are so weak, right? So then how we can make profit in the stock market? Actually, to tell you the truth, we don't need to be stronger than the wolves. We only need to be stronger than the rest of the sheeps, than the rest of the retailers. As long as you can be stronger than the rest of the sheeps, then when the wolves are chasing after the others, you can tail after the wolf, and you can always be safe and always make profit. So how can we become stronger than the rest of the retailers? By learning and improving, by gaining, by mastering, and by getting and mastering a much more powerful weapon, analytical tool, and also by improve our knowledge, our experience, our understanding about the regularities of the stock market. If you can do that, I'm sure you will be the minority of retail investors who can tail after the wolves to make profit, to tail after the big boys to make profit. Okay, so that's why as Homely, we do the training and we provide the software for our Homely members. We want to help you become stronger than the rest of the retailers. Okay, so that's all for today's sharing, and see you next time. Bye bye.